husband, by the way. So we're going to be talking about a very common topic that all of us as realtors, we sometimes struggle with, right? Which is getting powerful pre-approval. I think when we are submitting offers, when we're prepping clients, okay, I think I'm loud enough, but just in case, okay. I think a lot of times the number one key to success when you're a real estate agent is having a powerful pre-approval. Hello, ladies. Welcome, welcome.
Hello.
What are your names?
Angelica.
Angelica?
Cecia.
Cecia. Okay. You new realtors?
We just passed our test.
Good
I
job.
My license, she just got hers.
Okay, congratulations. So my name is Karol. Okay, I'm a lender with Premier Mortgage Xpress.
Okay.
I almost live in this office at this point. And this is Dora. She works with me as well.
Hello.
Okay, she's also a lender, been in the industry for over 20 years.
Okay.
Today we're going to be talking about number one key to success as a realtor, which is the pre-approval process.
Okay.
Okay? And I'll get your contact information at the end of the class.
Okay.
But as you begin, right, in this new industry, a lot of times the very beginning is the hardest step because it's how you move forward and how you make sure that all of your transactions, not only are they successful, that you get them to closing, because we might talk to like maybe 20 people a day, but that doesn't mean that they're going to close, right? It means that we're just talking a lot.
Yeah.
So if we want to make a considerable, maybe long-lasting memory in in a client, right, that just bought their house, it's going to be how was the process?
Yeah.
Was it smooth? Was it clear? Do they know what to expect, right? And it all starts from the very beginning, from the first conversation they have with you or with me. When we change the way we do business and tweak with clear focus on the changes, we produce bigger results and revolutionize our approach, right? So the way we do business, if we feel like something we've been doing it the same way and the same way 2, 3, 4 times, we're still getting the same result, that means the problem is not the business, it's just the way we're doing it. So that means we need to tweak. We need to be malleable enough to adapt and make sure that we get the result that we want. So how can a powerful pre-approval make you powerful? Okay, when we're talking to somebody, to a new client, I think establishing the foundation into how the home buying process works, it's going to give you a clear understanding, right, as a realtor, what to expect from that client, and for that client to know what to expect from the whole process, right? So you will either have a weak pre-approval that it's going to be missing ingredients, right? It's going to give you an uncertainty on the closing date. It's going to give you a bumpy escrow, and with not a clear direction on when are you going to be closing. So for example, let's put you some guys on the spot a little bit. One, when you get a client, what's the first thing you tell them? What's the first thing that you do? And they do not know, they have never bought a house before. Hi Juan, I want to buy a house, what do I do first?
Let's sit down for a buyer consultation, that way I can go over the process and possibly meet with the lender so we can look at your finances.
Perfect. So when you meet with the lender, what are your expectations from the lender?
Availability, and qualifying questions.
Right.
Are they working? Do they know what their credit score is like?
Now let's say
communicative.
when they finish talking to their lender, you would at least expect them to have a clear view of what's going to happen, what's going to be the next steps, right?
Yes.
For them to have a clear understanding of how we're going to do this, okay? A pre-approval letter, it's going to symbolize how much this client can qualify for. How much are their mortgage payments going to be? How much money are they going to need in the transaction? A lot of times, I'll get calls from realtors, let's say, who are already in escrow, and who are telling me, Karol, my client is not happy with their mortgage payment and they want to cancel because their payment is like $300 more. Why does this happen? Because the client had no clear expectation of how much their mortgage payment was going to be. And they end up finding out when you open escrow. So at that point, you're almost about to close and then they cancel, it doesn't make sense. And that's because they were not prepared correctly by the lender. Another thing it could be, the lender told me I needed $15,000 and now I need $25,000. Well, that's a big jump.
Yeah.
Right? We don't have a money tree. I need to know how much I need. I need to know if I need closing costs maybe from the seller. And all of that, it's prepared from the beginning. Okay? From the first conversation they talked to me about. And I keep on telling them this over and over and over again. So by the time that client is in your hand and you're showing them a house, that's it, they're ready. They could be problems with the house, they could be problems with anything, but trust me, it's not gonna be with their money, monthly payment, and interest rate. They're ready and set and go. And that's what's gonna make a difference, because then they're gonna remember when they bought the house and think, it was such a stressful experience, my payment was this much, and it was not clear, and I didn't know what I was doing, and I felt like I was taken advantage of, versus, it was so smooth, I wanna do it again. Or I wanna recommend my cousin to this person.
Yeah.
Because it's a referral business, right?
Yeah.
One person can lead you to maybe their whole family and the circle of friends.
Right.
So as we work in this business, even though we're independent contractors, just know it's a team effort. From the lending to the realtor to escrow to title, and if we're not all in sync, it's not smooth,
Yeah.
right? Now, a lot of times we'll have people ask, should I get pre-qualified or pre-approved? We have like these two words, and sometimes people think they mean the same thing or they don't. Or a client comes to you, you talk to them, and they're like, I've already been pre-qualified by Wells Fargo or Chase, right? What does that mean? Okay, so let's talk about the differences. A pre-qualification is basically a ballpark estimate. So let me give you an example. Let's say I talk to Angelica. Angelica, how are you? What do you do? She tells me that she works in, I don't know, let's say Northrop. And let's say you tell me you make $10,000 a month, you have 700 FICO score, and I tell you, great, you can qualify for 500,000 based on what you're telling me, so I pre-qualified you. Now, did I get documents? No. Did I run credit? No. Did I check on your pay stubs or talk to you a monthly payment? Not really. So, but maybe what Angelica tells me it's true, and that's the correct answer, but maybe she's overestimating her numbers. Or she forgot that she has a bankruptcy a year ago. Or maybe, I'm just giving you an example, I'm sorry. But you know what I mean? It's just a verbal conversation, so there's nothing to back up what that person is telling me. So that pre-qualification could be faulty, which does end up happening a lot when we're working sometimes with bigger banks, right?
Yeah.
Because it's mostly a phone call. So it doesn't hold as much weight, typically done for free over the phone or online. Doesn't include credit history, so I didn't run your credit. I just took your word for it.
Yeah.
Now, what is a pre-approval? It provides a definite answer on how much can somebody borrow money. So I checked your documents, I checked your credit. This is exactly how much you could qualify for. It's factual. It speeds up the buying process because if I have a pre-approval, that means I have all your documents, I have your credit. If you get into escrow, I'm ready to close because everything has been done from the beginning. Also, it requires the completion of a mortgage application. So yes, again, I have all the documents ready and I have a full picture of your file. So you ideally, when you're showing somebody houses, you would want to have a pre-approval letter and not a pre-qualification letter. Yes?
So if they get pre-approval, that means they're definitely gonna close escrow, like, from your side?
That's a good question. Yes and no, right? A lot of us that are in this room have been in the business for long enough to know that nothing in life is guaranteed. And the same thing with escrows, right? Let me give you an example. I had a client, they were ready to go, right? They were ready to close. Right at the very end of the transaction, they had a problem in their family and they needed that money to use it for hospital bills. Person in the family fell ill, This still canceled. Now, there wasn't a problem with the loan, but it just means that sometimes it might not close because things can happen, right? I had another situation where the client genuinely forgot to make a payment on a credit card. They just completely missed it, and they had a late payment on a credit card right before closing. And their credit score went down, and we had to switch it up. I had another event where a client right before closing got let go of their work. They got fired. So what do you do in this case? You cannot do anything. You're gonna have to cancel, right? So there are events, right, which could hinder closing of a file besides the loan. But ideally, when we give out a pre-approval letter, it's because this file is going to close when it comes to the loan, right? If things happen outside of our control or your control, then there can always be possibilities. Does that answer your question a little bit?
Yes.
Now, another thing is not all pre-approvals are the same, right? So maybe you get a pre-approval from another lender, but maybe they didn't check their facts correctly. Maybe they didn't check all the pay stubs, they didn't read the income good, and they gave you a pre-approval, but because they didn't do their homework right, still doesn't close.
But does that mean that underwriters have given a pre-approval too?
No. We get a DU, which I'll talk to you about in a second. Okay? So at this stage, we're not sending the file to the underwriting. The underwriting, think about the underwriter as the financial department in the bank who gives you their blessing to finance the loan. Okay? This usually happens when the file is in escrow, not prior. Okay? Prior, it's only the lender who's going to give you the pre-approval. So choosing a good lender, of course, is going to make a big difference versus somebody who maybe it's newer on the business, it's learning as they go, or something like that. Okay. How long does it take for me to pre-approve a client? Filimon, did you have a question? Oh, sorry. How long does it take to pre-approve a client, right? I think that's one of the number one questions. Karol, I just sent you a client. Where's my pre-approval? Okay. It could take a couple hours. It could take a couple weeks. Okay? One, you're in front of me. I have to use this as an example. The other day, I met with Juan's clients. Okay? They came to the office, but they came in ready. They came in with all their documents. They were approved within the same hour. Pre-approval was set. You know, it's all done. So it could take an hour if the client is ready and they have all their documents in, then that's it. I can just check on it. It's fine. Now, let's say I talk to you on the phone, right? And I ask for your documents and you haven't sent them. And it's week number 2 and you haven't sent them. And it's week number 4 and it's month number 2. And so it could take a couple months. Now, we do take pride in the fact that we're extremely fast. Not everybody says fast, but it's one of our number one pride things, just how fast we can answer a phone call. If you text me the name of the client, I'll call them right there and then. But it does come a point where like it's going to be the client's responsibility and motivation for them to send us documents, because if I don't get them, I cannot pre-approve you. Okay? Keep in mind that sometimes, pre-approval, it's just a letter that I type up in Word. So anybody can give you this piece of letter and tell you the client is pre-approved, like, Angela, you're telling me this, having a pre-approval mean that you're going to close it? Depends who's giving you that piece of letter. Because I could type up something in Word really quick. Yeah. Doesn't mean that I check their documents, right? And I think that's when all of us know the difference between working with somebody that you trust and you know they do their job and somebody who is kind of questionable, okay? Does this part make sense so far? Feel free to ask questions as we go, okay? Okay. Now, Angie was asking something very interesting. Do we send the file to underwriting at this stage? And I said no, right? But there is something that we do, which is a DU. Does anybody, Philemon, what's a DU?
Is there one in front of now?
Okay. Okay, let me put Rami. Do you want to answer? Or should I put somebody on the spot?
Try. A DU is some
what do you need it for? What do you need the DU for? Why would you ask your lender to give you a DU?
Oh, because he gives you the ratios, like the house ratios.
Okay.
So.
If you're a listing agent, you will want to ask for a DU or no? Or is it only for the buyer's agent?
No, you want to ask for it.
Isaac, why would you want to get a DU if you're listing a house?
Because I don't want to present an offer or have my client accept an offer that's going to fall through bidding. So I want to make sure that the client is fully pre-approved.
Fully pre-approved,
and
right?
I'm not wasting my client's
Time.
by
Okay.
presenting an offer.
Why is that? So we said that our pre-approval letter is just a piece of paper that I can type up in Word document, right? A DU is not, okay? A DU, it's a desktop underwriting. Basically, it's an automated underwriting service. So when I take down your information and I run your credit, I can run your file to what we call DU. DU is going to read everything that has been written up on the file, and it's going to give me an automated approval or denial. Okay? And it's also going to tell me the conditions or everything that I need to get a file to closing. Now, have you gotten a DU and maybe the escrow fell out? Has happened, right? Where you get a DU and they cannot close the loan. Has it ever happened to any of you guys? Has it happened to you, Rami? Not from me. You didn't get the DU from me.
No, I was on the listing side.
Okay. So why does that happen? You could still get a DU and the client might still not, yeah, Isaac.
Because the borrower might take out a new loan that appears on the credit and throw the ratios off.
Yes and no. So why is the DU sometimes faulty? Because the DU is only as good as the information that I plug in the file is good. So let's say Angelica told me she makes $10,000 a month. I plug that in income in the file. I run the U, it's going to approve it, but then I get her pay stuff and maybe she makes less, right? So then now I get a denial because I didn't read the pay stub correctly as a lender. I didn't plug in the information correctly.
So you don't always necessarily need all the documents to get a DU?
I need the credit. As long as I have a credit in file, I can take a DU. I can run a DU.
You can also mess it up like you say.
I can mess with it.
If you are like right at your limits,
Yeah.
and then let's say something comes up higher, like insurance right now, you know,
Yeah.
a big issue with the fire insurance. So if it comes up higher than what they, estimated, so it can just throw the ratios.
For example, let's say I qualified you with $100 in insurance, right, a month, and then the house is in a fire zone, and your insurance is like $300, so your payment went up $200 more. It's gonna throw up my debt to income ratio, right? So it could be things like that. It could be maybe I put income 10,000 and it was 1,000. It could be that I put that the borrower was gonna pay off 5 credit cards and they don't have the money to pay off the 5 credit cards. So the lender can mess with the DU, right? So this is why choosing somebody to work with that you fully 100% trust, it's so important in this business, and knowing that you're fully supported, right? Because knowing all of this and knowing how easy it is to make mistakes and how easy it is to make faulty documents, that's how easy it is to not close a transaction. And when you spend all your time showing somebody houses, nobody's paying for our gas, for our time, so we need to get them to closing, right? We need to make sure that everybody's putting their grain of salt into it. Okay? So basically the DU, it's an automated underwriting approval that it's a quickly review of the borrower's financial qualification and decide their loan terms. It is also going to assess for me what documents do I need for that borrower. It's gonna tell me how many pay stubs I need, how many bank statements I need, etc. Now let's say you get approved, you get the pre-approval, you get the DU, and you start putting offers on the houses and you get the offer accepted and it's time to remove contingencies. Does everybody know what removing contingencies is?
I struggle explaining this to my clients sometimes. How would you explain it? Because I know contingencies are any reservation or like doubt that the client might have in terms of being able to close a deal, whether it's getting the loan approved, getting the appraisal in, or have the property condition being in somewhat of a decent condition. But how do you usually explain contingencies?
Okay, so I mean, of course, they're probably gonna talk to the realtor about contingencies before they talk to me about it. But the way I explain it to people, I try to make it as simple as possible. So what I tell them is the following. I tell them, okay, there comes a time in the transaction, usually within 2 weeks, because it's after like 17 days, the normal, that we're gonna have to tell the seller, hey, we're sure we wanna buy this no matter what, right? And at that point, you're guaranteeing the seller that you're gonna continue with the purchase, right? And you're willing to give up your escrow deposit to close this transaction because on your end, you are ready to go. Now, there is a lot of different contingency removals. You can remove contingencies for inspections, for appraisal. I'm just specifically talking about the loan right now. And you're telling the seller that, hey, I'm not gonna have any problems with my loan. We are ready to go, and we are removing contingencies, right? Now, does that answer your question a little bit?
Yes.
Yeah. So you're just guaranteeing the other party that you're ready to go. Now, usually when we put in the contract, we put a 17-day contingency period, sometimes shorter, right? We have been able to do shorter contingency periods. We've been able to do 10 days or 12 days for the loan, just for you guys to know. But it also depends on the clients and their file. And when I give you a pre-approval letter, I will call you and tell you, hey, this file is ready. Like, if you want to put 12 days to get your offer accepted, do it. Do it because it's good. Or I will tell you, this file, there's this and there's a couple things that, let's keep it at 17, okay? So you'll have my expectations on the file because not all buyers are the same. Some buyers are easy, some buyers need a little bit more work, right? But when you have a strong pre-approval at the beginning, you have all the documents in, you have everything ready to go, then you're gonna be able to make yourself look good as a realtor and be able to remove that loan contingency, right? Because nobody wants to be in the middle of a transaction getting 1,000 phone calls every day. Hey, are you gonna be able to close or not? What's happening, right? If we're not able to remove the contingency period. A strong pre-approval benefits buyers in removing loan contingencies by demonstrating financial capability. So you're demonstrating the other side that you're financially capable of taking on this house. Helps realtors leverage strong offers. Maybe you have a question. If you want to make your offer really strong, would you put a 17-day contingency period, or would you might want to shorten it?
Yeah, shorten it as much as possible.
Right. Why is that? Why does that make you look good?
Well, it gets the buyer to a point where there's no more concerns. So when the buyer is confident they want to purchase the home, they've done all their investigations, the seller's confident that they're going to be closing because
Correct.
there's no more concerns.
Correct. So it gives everybody like a peace of mind. I can close this. I'm going to be able to sell my house. I'm fine. I'm going to be able to buy the house. It's fine. Yeah.
Can I add one more thing to that?
Yes, of course.
So Mike Jackson actually taught me this.
Yeah.
He did a 17-day contingency, and I got it on like day 10.
Wow.
And I was like, hey Mike, you know, you don't have to have me right now. He goes, true, but what happens is if you allow those contingencies to continue to roll on, or the longer it goes, sometimes buyers do get cold feet. And now we don't want them to buy a house that they don't want.
Right.
But the contract doesn't allow you to cancel because you have cold feet. Because then now, if those contingencies are still in place, they'll abuse those contingencies.
Mm-hmm.
And just because they got cold feet, they'll say, oh, you know, I don't like the roof, even though the roof is fine.
Thank you.
And they'll exercise a contingency that's not true. It's going against the contract. So he's like, if they're serious and they're ready to buy it, remove them as soon as possible.
Correct. And also, to add more to that as well, you just made me think of this. Because we're in a business of referrals, right, and we all know each other as realtors and whatnot, sometimes looking good and your reputation plays a big factor into things, right? So when JD is known for being a top-notch realtor, why is that? Because he removes his contingencies, because he's clear, because he's concise, because he's fair, right? Because he doesn't have clients all the time canceling because of this and that, you know? For the loan reason or for inspections reason or whatnot. Things that are in our control, let's put it that way. And that way you also, as a realtor, build your reputation, that you have such a great team behind you that you're able to meet your deadlines on the spot or even before. People know what to expect from the listing side, from the buyer side, from the client, the lender, everybody. And that makes a big difference between maybe somebody sometimes accepting your offer and accepting somebody else's offer. Yeah, let's say I have on two offers, they're both the same amount, 400, 400. This offer is represented by X, this offer is represented by Y. Maybe I want to choose Y because I know that they're going to get me to close.
Yeah.
It's something else. A lot of times we'll be sending pre-approval, and then when they see our names, they feel more comfortable.
Yeah.
Because they know for sure this is going to close. Now, is it price or whatnot? That's a different story, but they know we're going to close. And that makes a big difference. Sellers are more likely to accept offers from pre-approved buyers as it reduces the risk of financing issues and streamlines the overall transaction, making the process smooth and efficient for both parties. So, which is essentially what we've been talking about. Now, I just wanted to bring you guys an example of what we do when we put in an offer on a client. Whenever you guys put in an offer, usually you'll send the listing agent, the pre-approval, and the DU, right? And then maybe like a quick little email about the buyers, who they are, what expectations is. A lot of times I advise the realtors to CC me in those emails as a lender, because listing agents are not used to hearing from the lender from the beginning, right? And so sometimes they have reservations because of that, because they don't know who the lender is, what to expect from the client. So what we do is that we'll reply to the same email chain and we'll give the listing agent an overview of the file. So they know exactly what to expect and what to tell the seller, right? So we'll tell them, quick note on the seller for this file, borrower's income, credit, and assets, they're all verified. So they know that we have checked all their documents. We gave them a little description of how their income works. In this case, it was a W-2 earner. Husband works for Department of Defense and wife works for Kaiser Permanente, so they know that they have solid, stable jobs. Their credit score in this case, Now this was a fantastic file, mind you. Credit was almost 800, right? 790. We're using just their income. We're not even using bonus and overtime, and they're good to go. DTI is 15%, right? Buyers have a strong file, no debt, high FICO, extremely clean file. We look forward to closing this transaction together, but we're knowledgeable, quick, and can guarantee your sellers a smooth and on-time closing. Not everybody's gonna have such a clean file like this, right? But we'll put the strong part of the transaction in the email. So that way they know exactly what are the strong suits about the file, what's going on, how we got them to qualify. And this eliminates the need for cross-qualifications most of the time. Do we know what's a cross-qualification? Yes.
The listing agent will have your clients reach out to a lender that they know and trust and have them be qualified again, basically by somebody else.
Correct. So let's say, Angel, let's say we're working on a file together, right? I pre-qualified your client, you put an offer on a house, and the listing agent sends you an email, okay, you're fine, but I need you to first cross-qualify with my lender. That means that they want your clients to also send documents to their lender so they can cross-check them and pre-approval it's accurate, it's correct, to avoid any faulty escrows or like something falling out of escrow, okay? Because they know that we communicate a lot and we know what's going on with the clients, what kind of income, what everything. Sometimes it eliminates their need to do a cross-qualification because they feel secure. Hey, the lender is very responsive. The lender knows what they're doing. The lender knows their clients' documents inside out. They feel comfortable. And when the listing agent is comfortable, they'll make their seller feel comfortable because there's communication from the get-go. Okay? Because a lot of us, we're working with different people and they don't answer the phone sometimes. They don't know what's happening. Or you'll call a lender, hey, what's going on with so-and-so? And you're like, oh, hold on, let me check. I don't remember. Doesn't work. You need to look the part. You need to talk the part. You need to be able to know what you're doing. But that's basically all. I wanted to give you something concise, small, right? So you know exactly how the process works. Do we have any questions or anything that you wanted to know more about?
Pretty thorough.
Yeah, pretty self-explanatory.
Yeah. This is kind of like part one. So I was thinking each class will make it more detailed and more, we go deeper and deeper into how to qualify, how does it work, the different programs, right?
Yeah.
Yes.
If we have someone that we want to connect you with, what's the best way to do that?
Thank you. You have different ways to connect with me. I honestly, you can connect with me with any way, shape, or form. Either text messages. I have realtors who do 3-way calls with me and the client because sometimes they feel more comfortable if everybody's on the same chat. So they'll do a group chat. Hey, Karol, this is so-and-so. He's requesting for you to call at 2 p.m., right? And then you can send me a text. Okay. At this number, 818-746-0810. Hold on. Yeah, I'm tech savvy, but not all the
Your
time.
information is.
Oh, yeah. Okay, cool. By the way, this is Hadia. She's the manager, the one on the left-hand side. So you can text me. You can call me. You can email me. We even have our own application. I'll share with you the QR code that you can share with your clients, and they can upload documents directly to their application.
Oh, wow.
Okay? I do work on weekends as well. I take phone calls on the weekend. A lot of times we're showing people houses over the weekends. They work an 8-to-5 job, 9 to 5, and then you need to reach out to me on the weekend. That's fine. Text me, call me. It's the nature of this business is that we're always on the phone. So 818-746-0810.
So you have ways of doing it where they could just upload everything to you without coming in person?
Yeah.
Okay.
It depends on the client. I'll have clients who like to meet in person. They like to put a face to the name.
Yeah.
And I like that. I feel like when you meet somebody face to face, it creates that rapport quicker, and then you get to know them, they get to know you.
Yeah.
And then there's clients that I work with them for years that I never met them. It's all been through the phone. So once I worked with this client for like over 3 years, and then he saw me at the supermarket. He recognized me because of my hair. He was really hurt. He's like, Karol? I'm like, who are you? Because on the driver license, you don't look the same.
Yeah.
And I'm like, oh my God, it's you. So
Oh.
you never know when you're gonna meet your client. But Yeah, you can connect with me however you feel like however is the best for your client. I do mainly I'm here in Palmdale, but I do have an office sometimes that I use in Glendale. So if a client is coming from LA or downtown, they can
That's
always
good.
meet me there. Yeah.
That's good.
Right on.
Right on.
Thank you, Carol.
Connect with her right away, because if the buyer's motivated, you wanna
Yes.
catch them in the moment. You don't want them to think about it the next day because they lose motivation.
One piece of advice, exactly what Ram is saying. If you meet with somebody right now, they want to buy a house right now, don't wait to give me the number tomorrow. Because that client might talk to their pillow and get cold feet about it.
Yeah.
So you want to give me the number. Sometimes I'll have realtors, they're showing the house. They're like just stepped out. They say, Carol, call right now. They're in the car. And then I'll call them right now. Hey, how are you? I know you just saw the house and you liked it. Let's talk about it. So right away is the best policy.
That's good.
Yeah.
Thank you.
Thank you guys. Thank you for coming. Appreciate it.
Thanks for the muffins too.
Oh, no worries. Grab more. I bought so much. Please grab a few. Where is Nick? I know he loves, he has a sweet
He's
tooth.
probably on his way.
Oh, okay.
He's on his way? Okay, good. Filemon, uno.
Okay.
¿No? By the way, ladies, I speak Spanish. Hablo también español.
You didn't
Yes.
tell them, I would've opened with that.
I know, right?
I could tell that you are.
You could tell that I am?
She is too. I'm not.
I do have a very clear accent, but some people, I don't know.
Well, I can hear it a little bit, maybe because we have so many different nationalities around
Oh,
us
where are you guys
that-
from?
Yeah, she's Peru.
Oh, okay.
Everyone thinks I'm Hispanic because my husband speaks Spanish.
Uh-huh.
He's Mexican and Italian.
Yeah.
And he speaks the language. But I'm
Oh, no way. So black and white make Latino. There you go.
Yeah. I always knew I was going to marry someone Hispanic because I always loved the culture. I
Have
was
you
going to
seen,
Mexico since I was young, but
Oh, yeah?
yeah.
Have you seen those comedy shows where it's like people from different races marry and they form something else? What's your phone number?
Yeah, I know. I was about to ask you for yours when I see you right here. Mine is 661 390
I figure we could probably make
85?